I bought 5 whole residential units in Brisbane for only $1.6 million. And most people thought I overpaid, but within weeks, the value jumped over $1 million. The secret? Knowing which numbers to check. In this video, I'll show you the exact numbers I used and how I ran them looking at this particular deal, and how you can use them to spot hidden value and avoid costly mistakes. I bought this entire block of units right here for only $1.6 million. Now, this was an absolute bargain. Where this property is at, it is in Brisbane. It's in a suburb called Zilmere, 15 kilometers north of Brisbane CBD, 26 minutes-ish to get from the CBD of Brisbane to the property itself. It's an entire block of units. There is 4. I bought this one personally. If we look at the ad right here, it has 4 2-bedroom, 1 bath, 1 car garage, and 1 1-bedroom unit, of course, with one bath, 1 car garage as well. I try to find, different types of properties. In this case, I was looking for more unit blocks that I can personally buy and, pick up for investors as well. It was only online for like 5-6 hours, roughly. It was listed as a block of units because it was. So that's the first tick. But what I basically found out is that I've never heard of this real estate agency before, and nothing, against them. They're great to deal with, but they were actually the property manager of this entire complex. So what often happens as a backstory is usually they are not like niche in selling unit blocks and necessarily understand how will an investor look at it from a marketing perspective and like what will attract the right investor to pay the most amount of money. What I look for is basically that I believe is already undervalued from the get-go when it's actually online. And that may be due to multiple factors. I knew the marketing wasn't doing justice to this particular block because you can't even see what it looks like from the ground, right? So if these are all the photos, if you're an interstate buyer and this is all the photos that you have to go off, then like it's just not enough to be able to get emotionally attached to the property. What I did was also like look at the current lease agreements as an example. So like, first of all, we're in March 2025 when I was buying this thing. I looked on realestate.com.au. I know what the average type of unit or property rents for, right? And then I looked at these rents, and the highest one there is $300 per week. And these are 2-bedroom units in Zilmere. Like a 2-bedroom unit in Zilmere would be at least $450, probably more closer to $500 per week. So that's like 70% under rented. You've got these other ones, which we assume the one for $235 is the one better. But then you've got like a 2-bedder renting for $260 and $270 per week. The only 2-bedroom that I can find has 2 bathrooms, but that's obviously slightly nicer, but that's $575 a week. So anyway, I knew the rents were like significantly underpriced, which was one. And when people go to sell unit blocks, like sometimes they will look at it from a yield-based perspective. So like, if it's renting for this amount per year, it works out to be a 5% yield, and the average unit block sells with a 5% gross yield, so on and so forth. But if it's under rented, it doesn't make that unit block appear in the best type of light for someone to see it as value. So let me know if you agree with this. Like, is this a good marketing shot? As an example, I really believe that's probably the worst marketing they could have done. I jumped online as an example because I live in Sydney, and then this is the actual unit block. You can see the scale of this property now, right? It's basically 5 units, 2-story, double brick construction, over 20-meter frontage, over 800 square meter block, rectangular block, across the road from shops and petrol stations and cafes and stuff like that over there. It was ridiculously under market. And then if you go from this side, you can see the actual, garages and stuff like that. So you can see it's not just carport, actually garages underneath. When I was analyzing this deal, I'm like, it's not being presented in the best light. I know that there's more to this. I know it's significantly under rented. I called them up and they're like, they said roughly the guide was like 1.5 plus. So it could be, they'll start at like 1.5 and it'll be over that. Before we dive in, if you want the full playbook on how I built a property portfolio worth over $100 million, I put together a free ebook, and it breaks down the exact strategies I use to scale from no properties to over 150 properties in my own portfolio. You can download it below right away, and you can use the exact same strategies to scale your own property portfolio. One of the things that I did when I was looking at this block of units, I broke down the individual price per unit. So I looked at individual units in the area, and as an example, this is one. Like this one sold after I bought it, but it was even better. This is a 1-bedroom, 1 bath, 1 car. Again, old school unit. You can see similar age, but just has better marketing. 466, right? Another 1-bedroom unit on Harry Street in Zilmere that's went for 440. So in my head, I'm like, okay, 1-bedroom unit. There's one 1-bedroom unit in that block, And you got the average sale of, that was before, 440 to 460. Let's go 440 as an example. Then I go on the 2-bedroom unit styles. So that's 550. That sold again March, same time. And then you've got other ones that sold in January, 510. If the average one's 520, you times, and there's 4 in that block, well, then we're already at 2.08 million. Put the 1-bedder in there for, let's say, 440. Now you're at 2.5 million for value if it was strata titled. This property was on one individual title. You'd have to go through the strata titling process. You have to go through council deduction, strata title, and add those options. But I'm not doing that. I don't need to do that to get the equity out of this property. I bought this property for only $1.6 million. Again, the individual units broken down is like 2.5 if they were strata titled, if you were to sell them off individually in that market. With this property, the next thing I did, I asked the seller's side for routine inspection reports. Because again, I was buying this thing from Sydney. So I asked them for routine inspection reports, which is basically, if you don't know, it's a report that the property manager does when they go out to the property once every 4 months or so, and they take photos around the property just about the internal condition. So I asked for the routine reports. Here's one as an example, right? So this was the number 5 of that block. You zoom in, you can see the walls, the corners, you can see the kitchen. Kitchen doesn't look too bad. Again, these are affordable style properties. Kitchen there, bathroom there doesn't look too bad. Out external, you can see the brickwork. The brickwork from first glance doesn't seem too bad. Might be copper piping there, concrete on the ground. You can see on the side of the unit block, it looks relatively clean and tidy. And even this angle, I would say, is a better marketing photo than every single one of these that was professionally done by a drone. If I was listing that property online for sale, I would immediately go for that photo first and put like unit block over the top of it. So it just wasn't presented in the best light. So you got the externals of the property. That's just one of the units as an example. The key things to remember about when you're buying a block of units or when you're getting to bigger stuff like this is that when you're going to buy a property, you offer not just the price, but the offer terms make a massive difference. So when I was negotiating this property, my offers right away were unconditional, meaning no finance clause, no pest and building, no cooling off period, no due diligence clause. Definitely not. Big no-no if you're trying to actually get somewhere and make a deal in 2025, 2026. I knew it was value regardless. And I knew that I'm pretty sure I picked up like a 3 to 4 month settle on this. So I knew I didn't have the finance proof. I didn't. And in that particular time, I didn't have the 1.6 million to put down in cash because I'm always buying so many different properties. So I was like, I have to basically commit and figure the rest out later. And I did figure it out. I bought the property, it's settled, and this has been an amazing buy. I'm going to pull out equity from this property soon. But to me, this property should get valued at least 2 million. Also, another fun thing about this property is real address is 249 Zilmi Road, right? And you can see the price there, 1.6 million. You can see I bought it. It's my name. And just so I'll tell you guys, valuation estimates, 99% of the time, they don't mean anything, especially when like they've got this down as a unit. It's a unit block. They don't even have blocks of units and all that stuff. So it's showing it as a 2-bedroom when it's got 9 bedrooms and all that kind of stuff. So obviously the valuation is correct. Let's talk about the rental yield. So the rental yield at the time, if we were to go through this property as an example, all those up. So you've got 270 plus 235 plus 260 plus 255 plus 300. So altogether, you've got 1320 per week. These are significantly under rented. And if you're not a professional in property investing, if you haven't bought hundreds of properties like I would, and if you're a novice, most people would look at that and be like, oh, okay, that's the rental yield. We'll calculate it off that, right? So 1320 times 52 weeks in a year. So it's rented for about just a shy of 70K. And then many people will try to go off what it's currently rented for based off the purchase price. So if I were to do that, it would be a terrible yield, and it wouldn't make any sense. So $68,000 per year divided by 1.6 million is a 4.29%. Should you go off that rental yield when you're buying it? No, absolutely not. Let's calculate what the rent should have been. So we're talking at least, say, 440 for the 2-bedders. So 440 times 4 of them is already 1760. And then say, call it 380 for the 1-bedder at least. So that's 2140 is what it should be. And the current rents are only 1320. If you do the new rental return of what it should be and what it will be, and as soon as it comes up, because these are all coming up for, like, that one's been renewed till obviously later in the year. Nothing to do about that. Sometimes you just have to wait 2-3 months until the rents come off expiries, till the lease expires, and then you can put the rent up. But 2140 times 52, That's 110K per year instead of 68. Now, then you divide it by 1.6 million, and then we work out that the rental yield's about 6.9% gross, call it 7% gross. And those are pretty conservative figures. So the yield's gone from 4.29 to 7%. So that's where I saw the value at 7%. That the rental yield's good there because if I get an interest rate of 6% or 6.5%, my gross yield is above. You can see more outgoing. So someone pays $150 per fortnight for the mowing. The rates are about $1,100 per quarter. That's been the entire block. And the common area electricity is about $150 a quarter. But cash flow wise, this property would be neutral to positive cash flow. Neutral is fine, even if holding this property cost me $50 a week, which it would. Because once the rents go up to that amount, it's at 7% net to 7% gross yield. Like it's going to minimum break even. Another way to look at this, guys, is that how much is land worth in Zilmere as an example? That's another part of the equation that I look at. The most recent bit of land was a 550 square meter block for $740,000. Now this is 800 square meter block with a completely better zoning. This block would probably be worth $1 million as an example. Say the land, worst case, even 900K for the land, because you can build up to, sometimes 2-3 stories mixed. You can see as an example down here, subject to council approval, redevelopment, blah, 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 blah. Roughly say 600,000 divided by 5 units. That's basically I'm paying 120K per unit with the rental income. But I've got options with this. I can strata title it. I can get it revalued that way. I can just increase the rents to where they should be in market value, then get the equity out that way. But this is another amazing buy, another block of units that I bought. For this particular block, I'm pretty sure I had to put down 30% deposit. So it was about, 1.6 million times 0.3. Had to put down about 480. But yeah, another block of units that I bought, 1.6 million. You'd never be able to get a block of units in Sydney. You can't get a block of units of 5 units even in Perth now or Adelaide now. I saw that there was significant value there. I saw that I could be able to buy it, get it revalued, take the equity out, buy another property, just add it as another building that I own in my portfolio. 5 residential units on one title, good location, massive growth potential, under market value, absolutely. Yeah, 5 properties that are added to my portfolio just with one purchase. You can book a call with my team. We'll help you get the right property deal so much faster and below the bank valuation. The link's below. But not every property I bought has gone to plan. One of them cost me millions. If you want to see how a property I bought worth $6.4 million ended up being one of the worst property deals I've ever done, and what I wish I knew before signing the contract, watch this next video. Click on the link and watch it now. It could save you a fortune in the future.